You will want to sit down for this one. Elon Musk is considering buying the bankrupt Silicon Valley Bank. He says, I'm open to the idea. The bank has collapsed and is now under government control. So let's sit down and think about what would this mean for Tesla stock and Elon Musk promising that he would definitely not sell Tesla stock this year. How much cash does Elon have, and does he have enough cash? Because if he does not, then he would probably need to sell Tesla stock. First, we need to understand, is Elon Musk really serious here? And we can quickly come to a very strong conclusion by just reading this transcript from Morgan Stanley conference where Elon Musk was just interviewed recently. Elon said, I think it's possible to become the biggest financial institution in the world. He's speaking about Twitter just by providing people with convenient payment options. We certainly know that Elon is not kidding here. He is absolutely serious. One of the biggest problems with starting a bank is there's so much paperwork. It takes such a long time. All of the permits and all of the regulations and everything. It's so difficult. But if you just buy a bank, all of that is done. It's already here. And look at one of the reasons why Elon Musk bought Twitter. Buying Twitter is an accelerant to creating X, the everything app. He explains that Twitter probably accelerates X by 3 to 5 years, but I could be wrong. Buying this bank is no small feat. It was the 18th largest bank in the US by assets, although it only had a market cap of $26.5 billion as of 2022, September 30th. And all that equity is basically going to be nothing, zero probably. So in theory, Elon could pick up this bank for a very low amount, but there are bigger problems. People may just withdraw everything and then you have to sell all of the bank's assets. So it's not that simple to buy it. The question right now is this bankruptcy going to be contained to this one single bank, or is it going to spread and become a bad and unstoppable chain reaction, bringing down everybody? When you dig deeper into this collapse, it gets bad. Silicon Valley Bank's chief administrative officer was the CFO of Lehman Brothers Global Investment Bank when it collapsed. This guy has some serious experience bringing the biggest banks in the world down to their demise. Here's another interesting story. Silicon Valley Bank paid out bonuses hours before seizure. The bonuses were for work done during 2022 and were previously scheduled to be disbursed on March 10th. So yesterday, that date ultimately coincided with the bank's takeover by the Federal Deposit Insurance Corporation. Were these bonuses really supposed to be paid yesterday? Did someone change the paperwork maybe? I would want that to be looked into deeper. And who were these employees? If it's just regular employees, fine. If it's senior executives, yeah, I don't buy it really until I would see all the papers and all of the proof after a full investigation. If that is done, then yeah, okay, I will believe it. Then it was just a coincidence. If you look at the whole team of the bank, it is seriously not looking good. Here, for example, the chief risk officer led credit ratings in 2007. Which, basically started the 2008 crisis because all of the rating agencies said, oh, these mortgage-backed securities, they are solid. Turns out they were solid poop. We also know, looking at recent insider trades, that the top management sold millions of dollars worth of stock, in some cases, just weeks before this collapse. Is it possible, you think, that they knew something? For example, the CEO sold $3.6 million worth of stock. And this was the first time in more than a year that he sold shares in the company. Interestingly, he filed the plan that allowed him to sell the shares on January 26. So, in theory, he did not commit any crimes. But really? I'm not that sure. While Becker may not have anticipated the bank run on January 26 when he adopted the plan, the capital raise is material. It certainly feels shady to me. I think an investigation should be launched here. SEC. Also, interestingly, this whole thing started with a ratings agency threatening to downgrade Silicon Valley Bank. And to avoid the downgrade, the executives rushed to raise money. But they were not able to execute the plan fast enough, unfortunately. And then the whole thing just collapsed. And so, interestingly, the bank still had a rating of A just 3 days ago, although they were working on downgrading it. And you know what rating Tesla has? Not a good rating, right here, which is considered below investment grade. In other words, as junk. There's so much more going on. Abu Dhabi Investment Authority eyes buying Silicon Valley Bank. Should 50% of America's best startups be sold to a foreign entity? I mean, the actual companies would not be sold to a foreign entity, but the control of their funds would be. And the deeper you look, the more ridiculous the whole thing gets. Silicon Valley Bank had no official chief risk officer for 8 months while the VC market was spiraling. This is a circus, not a bank, says a chartered financial analyst. The question now is, why doesn't another bank just buy Silicon Valley Bank? I mean, there are a lot of customers, a lot of deposits, so why wouldn't you do that? Well, let's explore that. Wednesday afternoon, the bank announced that they had sold $21 billion of their available for sale securities at a loss of almost $2 billion and were raising $2.25 billion in equity and debt. And if they would have done that, everything probably would have been fine for now, unless they were able to raise more and more equity. This is basically when a company issues more stock in exchange for more money, which in theory should not really affect the company's market valuation, but it sort of does, because when companies do that, usually it means they are not doing very well and they are likely to lose that money. This came as a surprise to investors who were under the impression that the bank had enough liquidity to avoid selling their available for sale portfolio. So maybe if they would have raised the money first and only then sold their available for sale portfolio, maybe then it would have been okay. But Moody's was sort of rushing them and they didn't have much time. So investors started to look at their hold to maturity portfolio and it looked really bad. Here you can see available for sale securities at fair value. They have sold most of these at a loss, at a $1.8 billion loss. And then they have a whole lot more that they purchased for $91 billion. But if you sell these today, you only get $76 billion. So you have a huge loss and investors did not like that. They freaked out and they did not give any more money to the bank. When you get a massive bank run, you have to sell off available for sale securities. Then, when you are worked through that cushion, and the cushion was $28 billion, you have to sell off hold to maturity securities. As soon as the perception hit that they had to sell off available for sale securities, bank run happens, investors don't want to touch the company, available for sale securities get sold off, and then hold to maturity securities get fire sold next. And that's why they couldn't raise the equity. Bank runs hammer asset liability mismatch, because the more you need to sell and the faster you need to sell, the worse price you are going to get. Why doesn't another bank want to buy them? Because it would be dangerous to assume that deposits would stay further exasperating the asset-liability mismatch. It's really toxic. Should the government take it over? Bill Ackman thinks so, the billionaire. And he has some interesting thoughts. We'll probably make a separate video just about that. And maybe they should, given the crisis we are now in. So Elon Musk buying this bank right now is quite risky. He does not have that much in assets. If everyone just wants to take the money out, which I see absolutely no reward in keeping any of your money in that bank, if there's even a tiny risk right now that there is a possible bank run that would happen again after the acquisition. While Elon Musk may be able to make it work, it would be certainly a negative on Tesla stock. Even if he somehow manages to buy this bank without having to sell Tesla stock right now, that is still a huge Tesla stock overhang. Because if there was a bank run, then he would probably have to sell Tesla stock, perhaps. It appears that the government is looking for someone to take over the bank right now, and we should know exactly who it is going to be on Monday. They are rushing, and they should. If a big bank takes over Silicon Valley Bank, then a lot of depositors may just choose to leave their money inside their bank accounts. If that happens, then it is a great thing for the bank that acquired this collapsed institution. But if these businesses choose to withdraw everything, that's going to be difficult for whoever is going to buy this collapsed institution. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.